Welcome everybody once again. My name is Fahad Hasan, and as brother Hasan introduced myself, I live in the Netherlands, and I have 15 plus year experience in project management and compliance, AML and KYC area, different roles. And I have worked together with the organization TAIF for the KYC module, the Know Your Customer module. And this webinar is, on the one hand, we will be discussing the topics involving KYC, and also about how the webinar and the course will help you gain more experience and knowledge in this area. KYC evolving, it has a question mark. I will explain the question mark at the end of the session, but basically the topics are about KYC in general, the KYC process, know your customer process in general, what it contains, and how do you perform those steps. All of the information provided today will be comprised, so it's not in details as we only have 1 hour session. So I want to also have a time and a moment for questions from the attendees. Also, the other topics will be about the cryptocurrency regulations, and also about artificial intelligence, and about the ultimate beneficial owner transparency. Each topic will be explained. I will provide some examples and some case studies. And then at the end, we'll continue with any questions. So KYC process in general. Obviously, I don't know the background of the attendees, whether you already have some information about KYC or not, but I will briefly mention what it contains and what it means. KYC means know your customer, and it is a process set up by financial institutions, but it is now reached in other industries as well, as you may have noticed over the past years into other companies such as cryptocurrency companies, but also insurance companies, pension companies, other types of companies, where this process is very important. What does it mean? Know your customer is basically, the goals are that you know your customer who you're dealing with before entering into a business relationship. So as an example, if you have an individual, he wants to open a bank account, he goes to a bank. Well, the bank needs to know who this person is and where his income comes from and where does he live, etc. So to verify who this person is, there are a couple of steps. I will briefly mention that. But that's the most important thing, to know who you're dealing with before entering into a business relationship. And the other goal, obviously, for financial institutions and for other institutions, is to prevent bad actors or criminals to enter and to misuse their business platform. And I will also briefly touch on that in the next slide. So the know your customer process, where it's important to perform steps to know your customer, it basically has a gather and requesting customer information. So if you have an individual, you want to know who this person is, you will ask their ID passport, and to verify that ID passport, so that you know that indeed this individual is indeed the person that he's saying. So if I come, I say, yeah, my name is Fahad Hasan, I want to open a bank account. The bank will ask me, okay, can you provide a ID card, a passport, where we can verify that you are indeed Fahad Hasan. So that's one part of it. Also, if you're dealing with a business or a corporate as a customer, so a company as a customer, you need to know where they are registered, what type of business they do, who is the ultimate beneficial owner, so who owns the company ultimately, and what type of risks are there in their business. So those type of information, you will reach out to the customer. That's the process or the step, as I mentioned, step one, gather and requesting customer information. Well, when you receive the information, you have to assess it. You have to see whether you can verify the information, whether you see any risks attached to the information. Those risks are based on a couple of factors. So if you're dealing with a, let's say, a company as a customer, you would like to know in which jurisdiction they are located. Because as you know, as you have in the news seen, that we have now the situation between Ukraine and Russia. So let's say a company wants to become a customer of a bank, but they're based in Russia, then at this moment there are sanctions. So can you enter or accept this customer that is located in Russia? Probably not, because you have the sanctions and you have to oblige by those sanction rules. So that's why you have to assess. So one is the geographical risk. The other one is the industry risk. So in which industry is the company active? If a company is active, let's say in weapons delivery, obviously that is for a lot of financial institutions a prohibited industry. So they don't want to deal with any company that are working on weapons. So then they can also refuse. So that's a big risk. Other risk can also be a customer risk, meaning that we don't know who is the owner of this company. So we need transparency. I will get into that in another slide also. So after you assess the information, you have the part 3 where you make a risk score decision. And that risk score is in a lot of the financial institutions, low, medium, high, and unacceptable. And that's also based on the mitigating measures. What does that mean, mitigating measures? So if you have a customer located in, let's say, a high-risk country, you can perhaps mitigate the risk by saying that they don't deal with cash or they are being monitored on a daily basis. So those are mitigating measures. Then you can negate the actual risk, and then you have the residual risk. And the part 4 is obviously after you have accepted the customer, you need to monitor the customer. So a lot of financial institutions have software in place that monitor the customer, screen the customer on a daily basis. So those are the main 4 points when you perform customer due diligence within the KYC process. These steps provide you a good overview of who the customer is at that moment with that information. You're dependent on information that's available to you. And this process is gained a lot of importance over the past years, because before a lot of years, what happened was that these type of departments where you perform the KYC process, those were very administration work, but it has evolved into very risk assessment and risk-based approach thinking, where you have to really look into the business and try to prevent your company into entering a business relationship with somebody that's a high risk or unacceptable risk to your company. And with all of the changes that I will mention going forward, you will see that the KYC process is being evolved and changed on even on a daily basis for some companies. So it has been a lot of happening these past years. You know, the increase of cryptocurrency companies, the fintech, but also in other areas. And I will touch on those in the other slides. So as I mentioned, the reasoning for the KYC changes are a couple of them. Is what you see is that a lot of financial institutions failed in adhering to the KYC process or the anti-money laundering process, where they have to understand who their customer is and if they really understand the business and the customer activity in transactions also. So you will see that, you know, like one of the articles here is HSBC is fined 64 million for failures in anti-laundering process. These type of issues happen very often. A couple of years ago in the Netherlands, there's a big Netherlands Dutch bank, ING. They received a fine of 800 million euros. And it was all because they failed in their KYC and anti-money laundering process. So what happens is that a lot of changes are then requested. On the one hand, from the regulators, on the other hand, from the business itself. So that's why you see a lot of changes happening in the KYC field. Also, you have changes in the laws and regulations. So, you know, one of the laws and regulation area is the AML Act, the Anti-Money Laundering Directive that's set up by the Financial Action Task Force. That's an intergovernmental body which works on anti-money laundering process and the KYC process. And those processes are then implemented by countries into their own local country process. And then within those countries, you have financial institutions that need to implement into their organization. So it trickles down from above, from the FATF, all the way to country level, all the way to the company level in those countries. Also, developments in the business. So as I mentioned, you have seen an increase of cryptocurrency companies and fintechs over the past years. And what has happened is, even though it has increased where you can buy cryptocurrency for yourself or for other people, also the way of laundering money or fraud activity, scam activity have increased in this area, in the cryptocurrency field or in the cryptocurrency exchanges. So therefore, you also see that if you have a new type of business, the cryptocurrency, you know, the blockchain technology, that obviously it started off as not being regulated, and now it has to adhere to a lot of regulation in a lot of countries. Netherlands is very strict on that. So if a cryptocurrency wants to set up their operation in the Netherlands, they have to follow a long process of providing process on AML KYC and providing proof that they know how to work in this area without making big mistakes. But obviously, big mistakes happen all the time, as you can see with Binance. Binance is a big crypto exchange, and they have to enhance their global KYC requirements because they had also a lot of verification failures when they were accepting customers. So these are the main reasons in the KYC changes for the past years, as you can see. Going back to the crypto regulations. So last year I worked for a cryptocurrency company in the Netherlands. Well, I started there in end of 2020. And they were busy with getting their license in the Netherlands. And they were busy with the Dutch central bank going back and forth, communicating with them because they wanted the registration here in the Netherlands. And I witnessed that process. I experienced what type of questions they asked. And the main part of it was that they need to know, so the Dutch central bank needed to know whether this new crypto exchange is in control of their risk. They know their risk appetite. So risk appetite means that you know what type of risk can come into your business, but you have some mitigating measures. And then, after the outcome of accepting the mitigating measures, you have a residual risk. If that's acceptable within your business framework, then that's your risk appetite. And for the crypto regulations, it is very strict. Obviously, what has happened is you see a lot of fraud and scam related activities in this area. It doesn't mean that it's worse than with traditional banking or traditional finance institutions, because money laundering, terrorism financing, fraud, and scam and tax evasion risk, all of these risks happen in the traditional banking sector also. But however, dealing with this new framework with the cryptos and the fintechs, it is a new way of working for all of us. And you see that because it's very new and companies still need to adjust to the type of technology and the type of business they're generating, they miss out on some aspects of risk, and they obviously they get into some errors by accepting fraud related customers. And then there were instances where you had customers getting fraud by anonymous people, or hackers maybe, and then obviously they go to the company, to the crypto exchange, saying that, hey, listen, you need to help me. Somebody stole my cryptocurrency for I don't know, 100,000 euros. And a lot of them get into a legal battle. They get sued by customers, former customers, or they get a reputational risk. People saying on online platforms that, oh, this crypto exchange is very bad, etc. So all of these things happen, and that's why the regulators in a lot of countries, they said, you know what, we need to have more rules into this area, into the crypto exchanges, and they need to adhere to our laws and regulations if they want to operate in our country or in our framework. So that's why you're seeing in this moment time stricter crypto regulations. I think it is getting better in this area because you have a better setup and systems available to detect and investigate cryptocurrency scams. However, as in traditional banking and also here, it takes time. It takes time to grow. It takes time to achieve maturity and become a stable environment, and also for your customers. Artificial intelligence. I think dealing with these new developments, what really was needed is that a lot of manual work needed to be automated. So after going through a lot of manual steps that you perform as a KYC analyst, it was really important to look into whether we can eliminate most of the manual steps and automate it through a robotic process or to artificial intelligence. What is important for artificial intelligence is obviously data. So the type of data, that you request from customers, or that you gather from different sources, open sources or other sources, and compile them in a, let's say, a box where using algorithms, using other type of automated systems, where you can link different type of risk to the customer, and thus having the more control on an automated level of your customer and the customer risk. So if you have, let's say, on a daily basis screening of a customer, usually what happened a couple of years ago, or well, not couple of, but a lot of years ago, is that you had to screen your customer during the onboarding and then during the periodic review. But sometimes if you have, let's say, a low risk customer, the term between the onboarding and the periodic review can be sometimes in some organizations use 3 years, some use 5 years, even if it's a low risk customer. So in that meantime, that customer can be sanctioned, or can be become a terrorist, or can be involved in a incident where you have negative press on him, in any fraud related activity, whatever the case may be. Then you wouldn't know. You would only know if you would screen them again in the periodic review. So one of the parts was that we need to automate this, and we need to have it continuously screened. So a lot of companies are working now with systems and where they're linked to a customer. And if there is a, let's say, a bad news, then on a daily basis, through artificial intelligence, through automated systems, you can then see and match and link the customer to that bad press. So let's say you have a customer and he was low risk, but in the meantime, he got involved in a money laundering scheme, and he was convicted by the jury. That news came in the news articles, and it was public available. So then a link should be then made through this artificial intelligence, providing you a update that, hey, this article has used our customer's name. You need to investigate whether it is indeed our customer, and then perform the appropriate measures or the follow-up steps. So the analyst would investigate, see whether it is indeed our customer, and if it is indeed our customer, then yes, then we need to perhaps exit the customer, terminate the relationship, etc. You have different types of measures you can take then in those. So artificial intelligence is a part that you will see that also it is growing, because not only for the KYC part, but also for the AML part, the anti-money laundering, which is mostly adhered to transactional behavior of a customer. So let's say a company wants to do business with a sanctioned country, and they are using a shell company in a other country, in a medium risk country. What artificial intelligence could see is the link between the different types of transactions and locations and companies, and then provide a risk overview that that can provide us with a overview saying that, oh, this customer or this company is transacting through this company with a sanctioned country. You need to investigate. So that's why it's very important that we read upon it. I know it's artificial intelligence, it's a more technical area, because you need to know algorithms, you need to know how you can convert data into user requirements, etc. So it is a little bit more technical, but in essence, it's all about linking your customer to any open risk which you may not or are not able to find manually. Okay, the UBO Transparency. UBO stands for Ultimate Beneficial Owner, and it's mostly related to companies. So let's say you have a company as a customer, and what's important is to know that who owns that company. If you have a person, it's always an individual, it's always a person that is a UBO, whether he has 25% or more. That's the rule, that if you have 25% or more share or involvement in a company, you need to be labeled as a UBO. But if you don't have a individual owning a company 25% or more, then you have a pseudo UBO, meaning who is controlling the company. It can be a director, CEO, or board member, etc. So you need to, in that case, still apply a pseudo UBO, and which is mostly in the management area. But let's just look at if you have a individual owning a company 25% or more of a company. Now with the Ukraine and Russia situation, what has happened is that, you know, a lot of companies that are banking with European banks in the Netherlands or other countries, they have a, if you look at the ultimate beneficial owner, they have a Russian individual. Now, with all of the sanctions happening, you see a lot of a lot of hesitation in how to deal with those cases, because obviously you have to freeze assets of those companies, perhaps, or maybe exit a certain type of company if they are also having activities in Russia and the ultimate beneficial owner is in Russia. So all of these issues are applying not only for in this case, but are also for a lot of cases in the past years. So such as, you know, when the Paradise Papers or Panama Papers, these type of information was leaked, we saw that a lot of ultimate beneficial owners have company in tax havens where they either don't pay taxes for their company or very minimum, and they, you know, receive all the funds of it. To have more transparency who the owner is, a lot of countries have worked together now in a UBO register. So in the Netherlands, the UBO register will start, I believe, the first week of April. And what that means is that every company that is registered in a country in the Chambers of Commerce, they have to provide who the ultimate beneficial owner is in the documents. At this moment, usually what we did was we asked the customer. You can see the ultimate beneficial owner through the organizational chart, or you can see it through a UBO form. In some cases, a UBO form specifically is provided to the customer where they have to fill in who the ultimate beneficial owner is. And in this case, to have more transparency in who the UBO is of companies, a lot of countries decided that let's have a UBO register in each country. Then you can also share that information with other countries, because it needs to be transparent who the owner is. It can be somebody that's on a sanction list. It can be even a criminal or somebody involved with a terrorist organization. So that's why you need to know who owns a company. And therefore, this type of steps have been implemented. I think I am done with these specific topics. So I will try to close off now, and then we can go into some questions also. But to close off, in conclusion, what you see is that a lot has happened in the past years. New types of business have been emerged, as I mentioned, the cryptocurrency part. Also, a lot of companies and financial institutions have been receiving fines because they are failing in their KYC and AML process. And also, each time laws and regulations change, so every time the organization that uses KYC process, they need to change also. However, in the beginning of my slide, I had KYC evolving with a question mark. What I meant with the question mark is that even though all of these changes are happening, and indeed we have to perform additional steps perhaps, or maybe with the new system or with new types of data, etc., the essence of KYC, know your customer process, remains the same, which is to know your customer before entering a business relationship, and to prevent bad actors or criminals into entering your business platform. So those two goals still remain the same. And it's important, if you go further into details in this field, or you want to become a KYC analyst or gain more knowledge in the field, is to understand that it's good to read upon new laws and regulations and new process, etc. But however, be focused in the main aspect of it, which is, who is the customer? What are the activities they're doing? What type of risks are associated with those activities, with the background of the customer? Because one of the parts of knowing a customer is also knowing what the source of funds or source of wealth is, meaning that how did they gain this funds, this money, to start a company, or how are they using their funds in their company? So those type of questions, if you try to understand them and try to answer them with the information, I think you're already on a good path. And I think with this KYC process, it is getting more and more important. There's always a balance between commercial side of a company and the compliance side, being compliant. And I think KYC process is getting more and more recognition, getting more and more important for all types of companies, telecom companies, all types of companies. And it's good to understand that there's a lot of happening, which means there are a lot of positions in this field. There are a lot of opportunities in this field. So I think that is the end of my session. Thank you guys for your attention, and we can start with questions if you have any.
Thank you very much, Brother Fahad. Thank you very much for the detailed explanation of different aspects of the KYC and how things are changing and it's affecting the industry.
Thank you.
So we have Q&A, and you can see Brother Khalid have asked a question and Sayyid Imtiaz have asked a question. Can you see the questions, or may I read it for you?
If you can read it for me.
Sure, why not?
Yeah.
I can read it for you. So it's a long question. Brother Khalid is asking, with the use of the blockchain, which is a decentralized system, it is supposed that transactions are protected from any interference and change. So how does money laundering happen in case of use of blockchain in transactions?
Good question. Good question. Well, as in traditional banking, the main steps of money laundering is always placement layering integration, and that's the same within the cryptocurrency area. So what happens is that either criminals, they have, let's say, cash from illicit activities, criminal activities, and they put it in the system, such as, you have Bitcoin ATMs now, where you can put cash money in some countries, not all countries, but in some countries you can have a Bitcoin ATM where you put cash money in, and then buy a cryptocurrency, and then put it on your wallet. So those are some areas where it still happens. Also, the most of the parts are also fraud and scam related within the cryptocurrency, where you have a ICO saying that, hey, we have a new currency and it's going to be big, etc. And then a lot of people invest money in it because they think that, oh, it's going to be big and I can earn big money if I start now. And then what they do is they collect the money and then they disappear because everything is online, and they have maybe a front company, etc. So they disappear with the funds. So these are the steps that normally happens also within the cryptocurrency exchanges.
Next question is by Syed Imtiaz Abbas Hussain, and somehow seems that it's very relevant, and it's like a leading question to the above question. It is, what protecting measures are in regulations and laws of cryptocurrency for people who lost their huge money in cryptocurrency scam and hacking?
Yeah, that's a very good question, but also a difficult question, because there are exchanges that say that we don't use anonymous coins. So you have to have a regulated coin. It's very difficult at this stage. I think they're still working on a daily basis on regulations and laws for cryptocurrency, and at this moment, the only part that you can do as a customer and as a company is that you have to really know who the company is that you're investing your money in to buy cryptocurrency. Because one incident that happened was that there was a customer, and she got approached by a third party saying that, hey, we are opening a new coin, you can invest in us, but you have to invest through a other company. So they opened an account with our company, and then through our company they bought Bitcoins, and then they forwarded to that third party. The third party, obviously, they were scammers, and they went away. And she got upset with our company, saying that, hey, you should have regulated, or you should have checked, before this happened. But when we went through the process from beginning to end, we saw that the customer was warned by us 3 times about dealing with third parties without doing proper due diligence. When we did our due diligence on that third party, we saw that they were known to be frauds and scammers. So I think at this moment, companies, they are working on implementing the laws and regulations on protecting customers. The only way that they can do is they can warn you or provide transparent information in what your steps are going to be in that company. So if I'm going to buy cryptocurrency, how much will I get, and what's my wallet address, etc. But you as a customer have to do your own due diligence every time. If you enter a relationship, a business relationship with a new company, you also do your own due diligence before buying a cryptocurrency with a company, because you know that at this moment there are a lot of frauds happening. So be mindful and careful within your own space. Any other questions? Hello?
Sorry. Okay. Okay, Brother Humayun Khalid Qureshi is asking this question that in case of pooled account, for example, charity account, how can we apply KYC since the money is coming from different sources?
Yeah, that's that's very a difficult situation, because obviously when you have charity, a lot of people are donating to a charity, so you cannot assess them. So that's a part of the risk appetite that you have to look into. However, obviously you have a certain amount that you can accept as a charity. Also, look into the geographical areas where the money is coming from. So if you're receiving from a sanctioned or a high-risk country, then you need to look into whether you can accept that or not. So there are different measures that you can take within your company, even if it is a charity. It is very important to know that your type of business, it should have also a associated risk assessment into how to deal with these type of measures and how to accept certain risks. So if you're saying that, okay, we can accept funds from various people, then that's fine. But have a threshold for an amount, have geographical measures, and also you can monitor how the funds are being provided and through which types of accounts. So those are some of the measures that you can take as a charity.
Thank you very much.
Yeah, I do see one question. How do you think this control can, especially in African countries where the government is not ready to control crypto activities? It is difficult. But I think also in Africa, if I'm not mistaken, Nigeria is one of the African countries which is trying to work on their crypto regulations into controlling better. But when a government or a company is not ready yet to provide a certain risk framework or a control, then especially for a company, they can also make a decision that at this moment we cannot accept certain type of business within our company unless we have the appropriate controlling measures. So if you as a company think that okay, we cannot close down this risk because we don't have the appropriate laws and regulations, and we are exposed to a lot of perhaps illicit actors, criminals, then I mean, obviously the safe side would be that, okay, we need to have a business that is in control, that we can control, because governments will look into that. The Dutch central bank always looks into that how much are you in control of your risk? And if that means that you have to downgrade your business, that means you need to downgrade your business. But it takes management, it takes a lot of risk assessment of your business, setting up a risk appetite, as I mentioned. know what is acceptable within your framework. I see another one from brother Said Imtiaz Abbas Hussain. How to apply KYC where group funding is being collected or individuals, specifically say to NGOs. Well, it ties into the charity part, right? As I mentioned, it usually you have the threshold of amount, and you have to look into where these amounts, what type of amount you can accept, and obviously you have to screen whether these transactions are coming from various people, because you can have like also one person providing multiple times. So there are different thresholds that you can implement, and especially for NGOs, because you don't know who is contributing, because it is a charity, and you have millions and billions of people providing charity. So that's another part of it, that one hand you have to know what your risk is and accept that. Also, you have to have thresholds above, let's say, above 1,000 euros or $1,000, we cannot accept charity funds from people. So those type of amounts you can accept, and then make an assessment on a 6-month basis or a yearly basis, whether your policy is appropriate for the type of risk and the type of transactions that you're accepting from customers.
Thank you very much, Brother Fahad, for answering all the questions and for giving this lecture to everybody. I believe all of them have benefited with this session. So
well, thank you, brother Hasan. Thank you, Taif, for setting up this session. I hope that it was beneficial for everybody. I think also that the course about KYC will be also beneficial, and for individuals who want to know more about KYC in details and how to perform KYC as an analyst. Also, if there are any further questions down the line, you can always reach out to a Taif platform, and I will be happy to provide any answers or any guidance if that's required.
Inshallah. Brother Fahad, once again, thank you very much. And we have some appreciation for you. We'll send the certificate as well. I see the chat has been quite active, and still there are so many questions. So thank you very much once again.
If we have time, I mean, I have time to maybe provide 1 or 2 more questions. Or
thank you very much. Inshallah, please. Unmute me. Sadaqat-san, I want to say something. Okay, thank you. 1 minute, sir. 1 minute. My apologies, sir.
So,
I'll talk. Assalamu alaikum, Sir Sadaqat. How are you?
Yeah, walaikum assalam. I'm fine, and thank you, Brother Fahad, for your great efforts to giving us certain learning on the subject.
thank you.
And also, thanks to Taif team for arranging this informative webinar. I have 2 questions. My first question is that whether the KYC requirements are standard globally as a whole, or it differs from country to country, depending upon central bank directive of the respective country. This is question number 1. Can you please
Yeah.
Fahad?
Yeah, thank you, brother Sadaqat. I will. So the first question is that whether the KYC policies or requirements differ from country to country based on the anti-money laundering directives. It does. It does. Yes. Why? Because even though in general it is the same steps or the same information in the anti-money laundering directive for each country. However, each country has their own specific risks. So certain type of fraud-related activities or anti-money or money laundering activities happen more in some countries than in other countries, or some countries have more tax evasion risk, such as Curacao or such as Panama. So they are more adhered to tax evasion risk. If you look at other countries in Europe, they are more strict because they have like the Dutch central bank. They have to. The Netherlands is also considered as a tax haven, so they need to adhere to some stricter rules to the tax evasion risk. Other countries are less inclined to tax evasion risk, but maybe more to money laundering risk or terrorism financing risk. So each country have their own specific risk, and based on that, the policy on KYC can differ. Also, maybe a good website to view for your information to gain more knowledge is knowyourcountry.com. That's a good website where you can look into different countries which have their own set of AML risks and different types of risks, and it will provide you. Yeah, so this is the, and if you go to country reports, you can have different countries and then look into what type of risk is more adhered to that country.
Okay, good. Can I do second one?
Yeah, sure.
Have time? Yeah. Generally as per KYC requirement, declaring monthly income is also mandatory requirement for either it is individual or company level, corporate level. But suppose my question is the personal level that, but in case of a retired person with good saving from the salary from entire period of his services, how he can disclose monthly income now for the past? If suppose I'm retired, I'm going to open a new account, bank requires to disclose monthly income. It's a standard form and we have to fill that form. But
Well,
I have millions of income from the past.
Yeah.
I earn from the salary. So how to disclose? Whether KYC should be separate for retired persons, in your opinion?
Well, I think it also differs within different countries, the rules and the requirements for that specific part that you asked, because as I understand within the Netherlands, we don't ask a monthly income from somebody that's already retired. It doesn't, for me personally, it doesn't make sense, because if you're retired, why would I ask you for a monthly income? Your monthly income is coming from your pension fund, and that's your income, but you can provide me your pension statement, and that's it. And also, if you're my customer and I'm working at a bank, I see your monthly income coming in as a transaction. So I wouldn't ask you that question every month. I would see in the transaction every month that, okay, this person is retired, he is receiving funds from his pension. And also, if needed, I would see or ask you your pension statement. That's it.
No, you are right to the extent of pension. Like in UAE, the nationals are receiving the pension, but expatriates, outsiders who are still residing here, they are not receiving any pension. They are excluded from the pension scheme. But those, I know many of my friends I knew, those work from past 35 to 40 years or 50 years in UAE, and they have good savings. And savings are with them, they're utilizing their savings. So, but here in the UAE, it is in the almost all banks having in the form this field that you must put some certain amount as a monthly income. Otherwise, system will not accept.
Yeah, that's not how we do our KYC process here. And it doesn't make sense to me, because if you have savings, there should be a field, say your income comes from self-employment or normal employment or pension or savings. That's it. And you can just filter that and provide that information. If I, as a bank, see additional risk with you as a customer, then I would maybe ask evidence, a document to provide me to assure or verify that indeed this person has saved up this amount of money, so it's fine. It's coming from savings. But in if I have just an individual, he's pensioned, he has a savings, I wouldn't ask those type of questions. But that's why I'm saying that each country has, and each company also has their own type of risk that they have, and according to that risk, they change the KYC, the Know Your Customer process, and then ask these type of questions to the customer.
Yeah. Okay. Thank you. Thank you, brother.
Yeah, thank you, brother, for asking.
Jazakallah, thank you very much. Sadakat Saab, thank you very much for your insightful questions, basically.
Yeah. But you are also great moderator. Doing well.
Definitely.
Yeah.
Alhamdulillah. Fahad, thank you very much once again for your time, and thank you for your presentation. I hope that people have benefited, regardless of like, we always want people, any business want people to have like come and buy our products. But regardless of that, the whole purpose of Taif working is to provide sustenance, more and more information, and help in somehow growth of the industry. So thank you very much for all of you staying with us until the end, keeping intact, listening to us, and understanding more about Know Your Customers, the process. Thank you very much, Fahad. Thank you very much, inshallah. See you next time soon. Any last word before you go, so that we can close the session?
Yes, I think it was thank you for everybody attending and your time. Yeah, if you're more interested, go to Taif platform and look into the website and the course also. And obviously you can also reach out through Taif to me for additional guidance or any questions. And once again, thank you very much.
Assalamu alaikum. Thank you very much. Session is concluded.